Hey everybody, it is Tuesday, February 25th, another big down day in the market. I called the top. I was saying this since early January, and actually it's kind of humorous, but one thing that I do is I like to snip out these headlines which are really snapshots of sentiment at the time. And if you go back and if you look at my weekly issues of MMT Trader early in this year, early January, the first to second week of January, the headlines were all screaming bullish. We had analysts saying the worst thing you can do right now is take profits. Another one saying you got to buy stocks right now in 2020. And there were numerous headlines like that, which I clipped out, and I take a little image of that and I put it in the report because it's a great way to get a snapshot, a barometer of sentiment. And now I look at that, and this is classic. This is classic. We had back in, remember, if you go back to late 2018, November, December of 2018, the headlines were terrible. They were horrible. And I was saying at the time, look, all the economic indicators, the fiscal, bank credit, energy demand, all of these things were very strong at the time. And I said, you got to buy into that. You have to buy into that. And as we came into 2020, even towards the end of 2019, but as we came into 2020, I started to notice a slowdown in the fiscal support. I've been talking about that. I've been telling you about that. About tax flows, about spending flows. This is the core of the analysis that I do, and this is everything. Now, the coronavirus, and I'll be honest with you, I'll say it right now. We don't know the extent of the coronavirus. Right now, it does seem like this whole thing is escalating up into a kind of a panicky environment. I mean, if you look at statistics for basic flu, influenza virus, you're talking of annually anywhere from 5 to 30 million infections, people getting infected with influenza, and I think the death rates are in the tens of thousands, all right? So, we can get a little bit overboard on this. I'm not saying this is not a serious thing. But initially, what made me cautious on the market, let's go back to that, was what I saw as that fiscal pump starting to labor a little bit, starting to become less effective. We needed a tax cut, or we needed another significant boost in spending, because the tax flows now were exceeding the rate of growth of the tax flows, right? And taxes, that's the leakage, that's taking income out of the economy. That was exceeding the growth rate of the spending. Now, we have new information that just came out today, as a matter of fact, and it is not good. It is bearish information. And for the first time, really, that I can remember, you have to kind of go back to, 2009. We have seen, or what is happening now is that unemployment benefits, weekly unemployment benefits, are now surpassing where they were at the same time last year. Now, this is important because the trend has been lower year after year after year. In other words, less unemployment benefits being paid out than the previous year. And prior to that, less unemployment being paid out than the year before that. So that was an indication, at least one indication, of a strong labor market. And now we have reached that inflection point where unemployment benefits being paid out currently exceed the level of unemployment benefits being paid out at the same time last year. And that has been on an upward trend, but now we flipped over year positive now. The economy is in trouble. This is the beginning. The stock market is going down. The strategy now is to sell rallies. I do believe the dollar is peaking out. I believe that the rally of the last 2 years, which was a very minor rally, if you look at the dollar index. Now, I know some currencies have taken it harder than others. Australian dollar, for instance. But if you look at the dollar index as a proxy, a general proxy for the dollar, that rise from February 2018, let's call it February, March 2018 to now, 12.5% rally in the dollar. I mean, if you look at the dollar index since 1971, basically when we went off the gold standard, I mean, that thing has been in a downtrend. And some of the counter trend rallies in the dollar that have occurred over the years have been far, far bigger than this little measly 12.5% that we saw, in the last 2 years. It's been annoying. It's been frustrating. I've been short the whole entire time, but ultimately it will resolve to the downside. So, new information. You have to go to the website pitbulleconomics.com and sign up for a 30-day free trial of MMT Trader. I mean, all of this stuff, I don't know what else I can tell you. I was bullish the market for what? The last 4 years, basically. Every rally we were buying. Not because of any perma-bull type of, vision about the market or belief when it comes to the market. No, the fiscal situation, the MMT situation, all that stuff was saying, look, you got to buy every single dip. And things have changed. Things have changed. A little bit, maybe you don't know about me. Look, the mental game aspect is extremely important. It is the most important thing. You cannot succeed without the mental game aspect. And the traits that you need for success are the same traits that run through, they're common to success in general. It doesn't matter whether you're talking about trading. It doesn't matter whether you're talking about if you're an athlete. It doesn't matter whether you're talking about you as a businessman or in a relationship. Any type of success, these are traits. And basically it boils down to commitment, to not quitting, to the ability to handle adversity and discomfort. That is a very important thing. Life is filled with adversity and discomfort. We have to handle that. And our activity here, trading and investing, comes with a relatively high amount of stress. You know that if you've been active in it for any length of time. And the common reaction that people have, and again, I try to explain this because it's biological, it's physiological. The common reaction is to flee, is to run away, is to seek out something like as if there's some magic formula and what I call a system fairy that's going to take you there and allow you to, get to where you want to go, which is success and profitability without any discomfort. Maybe some of you, I'll take a little tiny bit of discomfort. My little stop losses, and then the next one is going to be a big profit, and maybe another little stop. No. That's fantasy, okay? You have to harden yourself. You have to develop mental toughness. Now, part of that, I do things. First of all, I've been involved in the markets for a long time, but it's not just the point of being involved. You could be involved and be losing all the time. You have to understand mentally what is going on and put yourself in there and saying, I'm going to embrace this. I'm going to endure this. This is toughening me up. It's like any sort of physical exercise. By the way, I wake up every morning at 4 a.m. and I go work out. I go to the gym. If I am traveling, like last week I was in Arizona and there's a 2-hour time difference and I like to stay on East Coast time, I wake up at 2 a.m. I found a place, and I try to find a place next to a 24-hour fitness facility. If not, I'll go out and I'll run. But all last week I woke up at 2 a.m. I went to the gym. I take walks. Like now here it's winter. I live in New York, East Coast, it's winter. I walk every night 3.5, 4 miles in a t-shirt. no jacket. I don't care what the temperature is. I'm out 3.5, 4 miles walking. Showers, cold shower all the time. I have not taken a hot shower in 30 years. Cold showers all the time. Mental toughness. These are other ways you can develop mental toughness. But you got to work on that. Anyway, go to the website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT trade. You got to get this stuff. You have to use MMT and the concepts and the understandings of MMT to invest and trade profitably. And the mental game. Mental toughness, everybody. See you tomorrow. Bye-bye.